Good afternoon and welcome to Trading Stocks, the news source that can make you money. Today we've got a special episode. Tonight, Tesla's stock does a 3-to-1 split. Today on this episode of Trading News, we're going to talk about what that means first off, and then we're going to look at where the stock could go from here via comparative analysis. We're going to look at historical stock split performance. We're going to look at recent stock splits to see, because we've had other major tech companies, Google, Amazon, Apple, all recently splitting. So we're going to look at how they've been performing to help give us some statistical evidence for how Tesla will perform in the coming weeks after their stock split. So as we get into it here, please hit the like and subscribe buttons, and let's go ahead and dive in. So we've got a report here from Bank of America stating companies have outperformed the S&P 500 by 16.3% after split announcements. This comes from the average performance of companies that have announced splits since 1980. So this is since the S&P 500 existed. This is covering all stock split performance since then. The lighter blue bar here is the stock split. The darker blue is the S&P return. And in 3 months, the typical S&P 500 return is 2.1%, while stocks that have just recently split are up 7.8%. Now, let's start here as well. What is a stock split? Tesla splitting 3-to-1. What does that mean? Tesla is currently trading at, if I go ahead and do my research here, Tesla is currently trading at $892. Let's just say it's trading at $900 for simplicity's sake. It's trading at $900 currently. So if you own 300 shares of Tesla at $900, first off, congratulations, you have a lot of money. Second off, once the stock 3-to-1 stock splits tonight, it'll do it tonight at market close, so at 8 p.m. So tomorrow morning at 4 a.m., you will notice the stock split. You will now have 900 shares of Tesla. So you will have triple the amount of shares in your portfolio, but they will all be worth $300 each. So the value of your shares, the value of your holding won't change at all. Splits are a zero-sum game. You're just going to triple the amount of shares you own, but the amount of those shares is going to be cut down by a third. Companies do this to make themselves more affordable. Obviously, buying $900 stocks is way more threatening and way a higher threshold for investors to get into than $300 stocks. Stock splits actually used to be way more common back in the day. Back in the day, before we had electronic brokerages, when you had to call a floor trader and buy stocks, you could only buy stocks in lots of 100. And nowadays, you can go buy partial shares if you wanted to. So it's almost pointless for companies to do splits anymore, but they still like to do them just to give themselves that lower price. But yeah, back in the day, you had to buy shares in lots of 100. So stock splits used to be way more apparent. Anyway, that is what will happen. You will notice that you own triple the number of shares of Tesla tomorrow, but they will be worth 1/3 of the price. Once again, not changing your amount of value in Tesla at all. It's a zero-sum game. But what we're looking at here is how stocks perform after those splits. So jumping back into it here, the S&P 500 typical 3-month return since 1980, 2.1%. Stock splits, so stocks right after they split, as Tesla will do tonight, typical 3-month return 7.8%. In 6 months, both of those numbers near about doubles. The S&P, a little bit more actually, goes to 4.4%, while the stock splits don't quite double at 13.9%. And then the yearly returns, 12 months, S&P typical return since 1980, 9.1%. Stocks after they split, 25.4%. So you can see that this is from Bank of America, and it's statistical evidence that stocks after they split tend to outperform the markets. But let's also do this. Stocks that split, it's because their price went up so much. They're already a very strong company. So this is a little bit of, is it correlation or is it causation? I'm leaning more towards correlation on this. It's realistically, it's just looking at the comparison of the S&P versus very strong companies, right? Because companies that aren't very strong have no reason to split. So of course, stocks that split tend to outperform the markets because it's just when a stock splits, that's pretty much proof that it's a strong stock, right? So is this correlation? Is it causation? What we're going to do now is we're going to send it out to our field analyst, Trey, on charts. He's going to look at some recent splits in similar large tech companies to see how they performed so that maybe we can get an eye on how Tesla will move in the coming weeks. Trey, out to you. Thanks, Trey. So what you all are looking at here is Tesla's daily chart, and the purple line in the kind of background of the chart is the S&P 500. So you can see the performance of the S&P 500 versus Tesla. I want to start back here because actually this is in August, or is this September 1st? It's late August 2020. So exactly 2 years ago, almost to the day, Tesla did a 5-to-1 split. There's no better way to compare something rather than looking at how it reacted to a split itself. So let's go ahead and look. It looks like this stock had a big run up into the split, and then post-split sold off pretty hard. I mean, it was a $500 stock going into the split, and then, well, it was whatever it was, multiply it by 5. So at this time, it was about a $2,500 stock into the 5-to-1 split, remember, because when a stock splits, of course, its price gets cut down by that multiple. And the multiple, let's talk about this too. The multiple also adjusts the whole chart. So it's not like this stock was 5-to-1, but now it's actually worth this. It goes back and adjusts the value of the entire chart when a stock splits, right? So back here, when the stock was 100, it really was 500 before this split. Touch on that too, because a lot of people get thrown off on that. They think like, oh, the stock is only down because it split. Like, no, the entire chart will adjust after a split. Hopefully that makes sense. But anyway, this seemed to be a bit of a, buy, and then after the split, pretty hard sell-off. Now, if we come up to what Tesla has been doing recently, not quite as hard of buying. And of course, remember with the S&P purple line here, the S&P's also been getting bought up. Let's look back here again. I think back here it was actually slightly, back here the run up into the sell-off was actually outperforming the S&P a bit. This is a very sharp buy. The current run up isn't super outperforming the S&P, just slightly outperforming the performance of the S&P. Not quite as sharp of a run up though. But will we see a similar reaction? Once again, just 2 years ago, to the month, 2 years ago, Tesla ran up into the split and then sold off pretty hard after. Now, of course, it sold off for like a week. And then if you look 4 months later, it had, what is this? Over doubled, like 150% in value. So run up, hard sell off, immediate reaction, buy the rumor, sell the news, right? And then, but 4 months later, it was up 150%. Larger picture look sometimes too. So can we expect to see something similar here? Do we expect to see a sell-off into the next week after the stock split here as well? Obviously, we'll see. None of this is going to be telling you what is going to happen. There's no such thing as this will happen in the stock market, right? It's all just prediction, but you can use previous patterns to predict future patterns, right? So let's go ahead and look at other stocks as well, because Tesla is a giant mega tech company. I know they're electric vehicles, but they're very much a mega tech company as well. And there's been a handful of other mega techs that have recently split, just like Google recently split. This kind of has a similar pattern, had a run up, although this one did sell off a bit before the split, and then even sold off a little bit again after the split, before running. Let's look at Amazon. Amazon had a 20-to-1, by the way. Amazon was very expensive when they split. 20-to-1 split, but look at them as well. They had a run up, they split, they sold off. Of course, now they're right back up. Of course, the markets have been going up. That's why the purple line is there, but a little bit more of buy the rumor, sell the news. Let's go ahead and, by the way, if you saw that pop up, I'm day trading during this. I just got out of a day trade. Just made a little bit of money there. We are still red on the day, but I just took a green day trade while I'm breaking this down. Go trade. Anyway, where was I? Oh, Apple. I know some of you guys just saw that pop up. I wanted to make sure I talk about it. We did just get out of a winning day trade there. Apple split 4-to-1 split back here. This was also August of 2020, so same time frame as Tesla's previous split. Also had a big run up into the split, and then a pretty hard sell off after the split. Once again, if you zoom out, obviously Apple, after the immediate sell-off, did really run again. So we're seeing a little bit of a pattern here in which it's these mega tech companies are having some buy the rumor, sell the news type effects. But remember, as Trey touched on in studio, Bank of America's research shows that over time, stocks that split outperform the S&P. So keep that in mind. Think about some of the larger picture. But there's a comparison. for Tesla's previous split and some other megatech recent splits to try to get an idea. Once again, I'm not saying Tesla will go up, will go down, will do anything. Our job is to put the information out there in front of you so you guys can chew on it and decide what you want to do for yourselves. So that's my analysis on the charts. Let's send it back to Trey in the studio. Thank you, Trey. So a very interesting look there comparative to previous Tesla splits and previous other mega tech splits. A lot of buy the rumor, sell the news happening, but of course, after the initial sell the news, they all ended up going up with the rest of the market. So let me know what you all think is going to happen with Tesla, be it next week and in the long run. Do you think we're going to get that immediate sell-off? And then do you think it's going to continue up after that? Or what? Let us know your all thoughts. Start a conversation down in the comment section down below. And with that being said, that's going to go ahead and be the end of our special episode today covering Tesla split. Remember, we put this news show on for free. All we ask in return, please hit the like button. And if you're new, why not subscribe? It's free. With that being said, you all have a good afternoon and stay green.